Okay, we are in April and we have a few payrolls to process. April is very busy in terms of payroll. We'll actually have three payroll runs. We will do them in details as April is going to be our last month where we do great level of details, and then we'll show all kinds of bypasses to expedite, the booking and to avoid spending as much time. Again, the downside, we will sacrifice some level of details, and that's something that we'll get to see. Anyway, here's our time cards. We have uploaded those time cards into the system. We're not going to manually enter them like we did in January. So, but they are here, and the information is in QuickBooks. Again, we can just show it to you. Oops. We can just show it to you by going to okay, here it is. So we will be processing payrolls for March, right? And here it is, March through 28th, right? All those activities are posted here. So now we're just going to process the payroll. All right. Let's do that. So employees, pay employees. All right, pay period end date. That's correct. Check date. It's going to be payroll date, which is 4/2/21. All right, payroll account. Yes, and we have 1, 2, 3, and 4 employees. Eventually, we'll have 6. But again, the simulation is very good and very interesting. Okay. So here we are, something that you're familiar with. Here's our 4 employees. Again, we're running payroll manually, or another option it would be assuming and using an outside system. And then we're just we had to turn that switch on in QuickBooks, but still we're kind of running payroll through QuickBooks, right? So we do all the calculations manually, and then we just update them here, which would be very much identical to if you paid QuickBooks to process your payroll. Payroll is very easy to process. And unless you have really large number of employees, that is something that you can do yourself. And this is something that we show you where you can practice debits and credits and understand it. So here we are, right? That's the gross pay right here. That matches, except for one penny, and those adjustments we'll make during as we enter the checks, right? We've seen it before because again, QuickBooks, again, it was done by programmers, so it has deficiencies. That we as bookkeepers and accountants notice, but hey, it's better than nothing, right? And it's probably one of the best systems out there. So anyway, let's get to it. Let's do those. Okay, you see nothing is entered, and what's interesting here is that that's let's see, that's Chisoma. So let's start entering those. That's our employer, and that's our employee taxes. All right, so. Chisoma right here, Social Security. We'll show you all the debits and credits behind it, just like we did in previous months. All right, and then let's see. There's our Chisoma. All right, the gross is correct. Federal withholdings 564. 233 12 54 52 state income tax 188 and disability 45 12. Net pay, yep, works out just fine. All right, awesome. So what do we have, right, in terms of debits and credits? Again, until we print the checks, it will not be posted, but we're going to get through the whole cycle. In the meanwhile, we can show in this specific instance what are debits and credits, especially after we segregated the payroll expense into payroll wages and payroll tax expense, right? So we have two portions. So what goes into the wages? Because again, the reason we did it is because for taxes, you will have to know the difference. All right, so first of all, our wages expense. What goes in there? That's your gross, right here, right? What does it include? It includes the net amount, the employee taxes. That's all that goes into your employee, essentially the wages payroll expense. So we call it, and I'll show you right here. Oh, because we're in that system. I'll show you afterward. Anyway, that's our new account. So the payroll wages is 66,100 and tax is 66,200. What goes into taxes? That's the employer portion. That's these two items right here. All right, that's our debits. Why are they debits? Because expenses go up when debited, and that's what we're doing. We're debiting them. What else is happening? Well, the way QuickBooks works is that this amount right here, that's the net check. It will essentially reduce our bank balance, right? That makes sense. So it will come out of our payroll account, which is 10,200, and payroll account is an asset and it's reduced when credited. So that's going to be 267524 right here. What else is happening? Well, this money, right, we haven't paid to the government. And then this money, right, we took a portion out, those are these, and we're keeping them. So that's going to go into payroll liabilities, 24,000. Because we now owe that money, right? And again, it's very easy to understand here. Liabilities go up when credited, and we need to increase our credits because right now we're not in balance. So what are we going to put there? We're going to put all of these items. 564 plus 23312 plus 5452 plus 1800 plus 45.12. All right. What else goes into those liabilities? The employer taxes, right? So there it is. Debits and credits are in balance, right? So again, this total right here, that's a debit to 66,100, right? These two are debits to 66,200, payroll taxes, that's payroll wages. And then how do we offset it? Well, portion of it, the net portion of the pay comes out of our bank account, right? So we indicate that, okay, this is going to be credited to account 10,200, all right? And then the difference we owe to the government. And therefore, their credits to account 24,000. So these two items become credit to account 24,000, and then some of these items. All right, so let's go ahead and go to our next employee. Next is Kim. All right, Kim is right here. Now let's go ahead and clear this up. This one is a little bit easier. So again, we have the 37,600. That's the wages. Taxes. Your taxes. Let's go back. Here they are. 496. State unemployment. We have ETT. And here 4324. Okay. So far, so good. What do we have on the employee portion? Net pay, yep, works out. So let's go ahead and put it. So what's going on here? That's our employer taxes right here, that expense, right? S- wait, wait. So employer taxes, because I detailed them, I'm going to detail it this time. 324 plus 333, 12 plus, I don't have the room. So I'm entering information from this portion. Okay. All right. So that's our total payroll expense, right? The only thing is we separated it into wages and into payroll taxes, right? So payroll taxes are the taxes that are paid by the employer, and then there's also employee payroll taxes, but they're part of the wages because they're withholding, as people also refer to them. All right. So we got the debits down. What's happening to credits? Well, as before, and it comes down to understanding the setup in QuickBooks, but the net will be immediately credited to our payroll bank account, and it is an asset, and thus it is reduced when credited, and the rest goes into liabilities, right? And what puts it together, it's the sum of these and this. So this one we can just take from here, 576, right? We owe that. And then this portion is the sum of this. Debits and credits are in balance. Very important. The most important part of it all, right? And we know that, okay, this amount right here, it's a debit to 66,100. Some of these amounts right here, I can't expand it to you, I have to scroll through, but some of these items right here, that's debit to 62,200. This net right here is a credit to 10,200. And then the offsetting for the liabilities is that some of this is a credit to 24,000, and then some of employee withholdings is a credit to 24,000. We're going to pay those taxes in just a little bit and reduce our payroll liability, but not just yet. And again, in the future months, we show how to book it directly by hitting your bank account and bypassing all this. But if you're in the live mode, this is what you'll see. These are the interfaces you'll be using. And then when we show you, the expedited methods to book it, you'll see that at the end of the day, the net impact on debits and credits is identical. Anyway, let's continue. Now we have Leba Hang. And this is where we have to make our adjustment. That's why our totals were not entirely correct. Again, that's QuickBooks. Again, it's a good software. Don't get me wrong, I love QuickBooks, but again, the problem with it is that it was written by programmers, and they're not accountants. They don't quite know what we deal with, and it's a product of conversations between accountants and programmers. Right? So it is what it is. Again, it's an excellent product given that what we have to deal with. All right, so here it is. Let's enter those and then explain them. All right, federal withholdings. Okay, social security. Uh, all right, net pay works out. Let's now look at the employer summary right here, and there it is. And Medicare. All right, so here it is, debits and credits. We have 3 payrolls in April. We're only going to explain it at this level of details for the first one, and then the following 2 will just walk you through it, debits and credits, right? But again, not at this level of detail. So enjoy. All right, expense. It's right here with adjustment to 1. So it's going to be a 7692.32 minus 01. All right, then we have the taxes right here. And then again, this is our credit to our bank account because that's the check that will reduce the balance. Right? And then we have the liabilities. Right? And the liabilities are basically this, which we already summed, and then the withholdings. One, I'll show you a little shortcut, right? What is the sum of these withholdings? It's the difference between this, right, and the gross. And the gross is this, or right here. So we can easily do that through just this minus this, and mathematically it makes sense. There it is. Right, so sum of this ends up being 2,911 and 54, and it is a credit to liability account. Liabilities go up when credited, right? 588 and 46 is a credit also to liability account because we incurred these employer taxes, but we haven't paid them to the government yet. The most important part again is that debits and credits in this interface equal each other. They have to. They have to. And by now, watching this series, you know they have to, right? It's all about debits and credits. All right, one more, and we have to make adjustment to their 2 because again, that's our paycheck for Kelly, for Reyes Kelly. All right, Reyes Kelly, and you can see that again because of the way QuickBooks handles, the billing system and the payroll and the time cards and how it prorates it. I don't know why it prorates it, but it does. All right, so we're gonna have to live with it by using these adjustments. All right, and again, it's absolutely not a big deal. It's just fractions of pennies. And so here we are. Oops, too much. There it is. Right, so our gross right now is where it needs to be. And now we will enter our employee taxes, the withholdings. Right, net equals, that's good. And then we're going to go to employer summary and enter that. There it is. All right, debits and credits. Well, in this case, they're very much identical, right? Because except, let's see, yeah, they're very much identical as for Labahang. They paid the same amount of money, it's flat rate. Their withholdings appear to be very much identical. They have the same situation. We can just, highlight it again. 13846 plus 476, where this amount is coming from, just different ways we could derive it, but oops, 69231 plus 9231. There are. Debits and credits are in balance, right? So all of this stuff here, it's a withholding, so it becomes a liability, right? The person earned this money, that's our expense. We gave them the check that will clear and reduce our bank accounts, right? That's a credit to bank account, thus reducing it. However, the money that we withheld from the employee, we haven't given to the government, so we still owe it. So it's a liability debt. Liabilities, debts go up when credited. Therefore, some of these items that we reduce the paycheck for the employee by, they are an increase to liability. Therefore, they're a credit to payroll liabilities account 24,000. All right, so save and close. There they are, right? This is our payroll. Now that it's done, let's show what happens here. So that's our gross pay, right here, right? This is our employer taxes, employer taxes. That's, again, we separated them. So this is payroll wage expense, this is payroll tax expense. Employer taxes is the payroll tax expense. Employee taxes are part of the wages. All right. Net impact, that's net pay right here. That's the sum of checks that will clear our account, right? Since we're already going to give those checks to the employers, we're booking the credit, the decrease to that account. The rest goes into liability, but we will pay those shortly here. So what do we owe to the government? Well, we owe the amount of money we withheld from the employees and the employer portion of the taxes. So employer portion is 204056, right? And the amount we withheld is here, 7992.60. Ta-da! Debits and credits align. That's what we wanted to show. Debits and credits equal each other, right? And now you know what is happening, right? And that's our bank account. That's the only account shown in this interface. However, all of these accounts are impacted, right? So the only item that we can clearly see from this interface is that, again, net pay $14,912.02 will be credited to account 10,200. Right. However, we also know that $7,992.60 will be credited to 24,000. We also know that $2,040.56 will be credited to 24,000. Right. We also know that $22,904.60 will be debited to 66,100. And we also know that $2,040.56 will be debited to account 66,200. So we're going to create those checks. Here they are, those 4 checks. First check is 17. Again, we'll have to renumber them. There they are. Oops. See, that's 14,912 right here. Tells us that's the account. Right. So once we print it and we confirm they were printed, this entry will be booked. This entry, the one in Excel, will be booked. All right, so let's go ahead and print them. All right, they printed. Only what did I do? Good. Close, and let's go back to the bank account for a second here and take a look. Here they are. Here they are. So let's change the check number. Kelly Reyes is 18. Skip number, we're gonna adjust it. Labo Hang is 17. Let's change it. Kim is 20. And Chisomo, okay. There it is. Chisomo is 19. All right, now all the checks is 17, 18, 19, and 20 are in order. All good, we can close it out. And I wanted to show you our chart of accounts, right? And the fact that you can see that we have payroll wages expense and payroll taxes expense, right? So previously those were combined into one account, we separated them. And we demonstrated that during this booking. All right, well, that's done for this first payroll of April. We have 2 more payrolls, so please stay tuned. They're coming up right next. Meanwhile, what we need to do is we need to fund the payroll, the first payroll, right? Because we need to transfer money from our regular account, right, to our payroll account, from our general account to our payroll account, right? And there are different ways to do it. For now, we're going to use transfer function. Going down in the few, going forward with the months, we're going to show you other ways to do it. just like we did with our food truck simulation. So that's what we need to book. How do we book it? We go to banking. It's one of the ways, right? Transfer funds. Again, we'll show you 100 other ways to do that. But for now, let's just do this one. So it's coming out of general account. It's going to go to payroll account, and transfer amount is $24,946. All right. So this amount right here, again, it doesn't show it's a debit or credit. It's both. Right, $24,946 right here. It is both. It's a credit to account 10,100, and it is a debit to account 10,200. Why? Because account 10,100, that's our general account, goes down and it's an asset, and assets are reduced when debited. And account, our payroll account, which is 10,200, it's an asset as well, that goes up when debited, right? And that's what's happening. So save and close. All right, so that's good for that. What else are we going to do after we're done processing payroll? Well, I encourage people to pay their payroll taxes immediately. All right, and that's what we have here. The payment of your state taxes and then federal taxes. So again, there's multiple ways to do it, and we'll show you in the future months all the other ways you could do it. But first, I'm going to show. We're going to stay with this and basically pay taxes, pay payroll taxes. We're going to deal with this interface that we offer us. As I always say, set the date for the payroll date. The other dates literally don't matter. Why? Because for tax purposes, the only date matters when you run the payroll and you give people the check. What time period it covers is irrelevant for tax purposes. It makes difference for labor laws, but we're not going to get into that. All right, so let's see. Check date again. When we run payroll manually in QuickBooks, it forces us to do, check, but we can mark it as anything we want. It doesn't have to be check. So first one is a state. So here we are. All right, $2,148.88. There it is. All right. What's going to happen? Well, we know for sure our bank account will be reduced by $2,148.88. Therefore, it has to be credited. What else we know? We're paying down our payroll liabilities. There it is. All right. So, or, in this case, we can actually indicate all the details. There's only 4 of them. That's our last detailed payroll. We have 2 more in April, but we're going to run those in a slightly different format. So you'll see the difference, but there it is. We're going to break it down for you on this. So here it is. Debits and credits are in balance, right? Each one of those will be debit to account 24,000. 24,000 is our payroll liabilities. Liabilities are reduced when debited. We are paying what we owe to state government on payroll taxes, and that's what it is. So we're going to go ahead and create it. That it is. It forces us to use this hold on, last 4 digits. This check format, but as we know from previous simulations, and we'll show you in the future as well, it doesn't matter that it says check. We can put whatever we want in there as long as we know our debits and credits, right? As long as you know your debits and credits, you can handle any adversity that they throw at you through their software. Right, anyway, each one of these 4 line items is a debit to account 24,000. This amount, 2,148.88, is a credit to account 10,200. That's it. Simple as that. Save and close. We don't need to print it because we're going to do it online. Most taxes are paid nowadays online. You just log into the government website and make those deposits. QuickBooks makes it easy for you too. You can use their services. Either way, as long as you know what you're doing, it doesn't matter. All right, so here it is. We paid down this one. Let's leave this open. What else? Federal taxes. Let's pay those. Okay. Again, set the date to the payroll date. That's the only date that really matters. All right. There are federal debt that we have to pay. Social Security, Medicare, federal unemployment. There it is. 1, 2, 3, 4, 5, 6. Yeah, I can do that. And 4. Let me show you. Since our last detailed payroll going forward, we start simplifying. Anyway, $7,884.28 accredited to account 10,200. Why? Because it's an asset, and assets are reduced when credited. What else is happening? Well, which one of these items is coming out of our payroll liabilities, right? We're reducing it, and liabilities are reduced when debited, so let's do that. 17496 420492 33212 12 4208 14208. Debits and credits are in balance, right? That's the key. That's the key. So each one of these items is a debit to account 24,000, and the total is a credit to account 10,200. Right? So again, we could click here to be printed. We could send the check, I suppose. Okay. There it is. Again, each one of those items is a debit to account 24,000, and then this item right here, $7,884.28, is a credit to account 10,200. Why? Because 10,200 is our payroll account. Payroll account is an asset. Assets are reduced when credited. Each one of these items is paying down liabilities. 24,000 is the payroll liabilities account. Liabilities are reduced when debited, right? Makes sense. We're taking cash out of our bank account, paying down debt. Debt goes down. Bank account balance goes down. Let's just make this adjustment. That's our federal. Alright, the date is, gotta watch the date because we're not in 21. Alright, there it is. We're gonna pay it, and that's it. And save and close. Yes. So that concludes our first payroll of April. We have 2 more. So what we're going to show you are the ways you can book those payrolls without the time cards information. Right? So we're not going to go through the same cycle we typically do. We're going to do something a bit easier. And again, that would happen if, let's say, you actually outsourced payroll and you would get payroll statements from services that provide payroll services, right? Again, there's quite a few famous ones, like there's Paychecks, there's AGP, and there's a bunch of newer ones. They're all pretty much identical. It's a matter of preference. But anyway, here's our time cards, right? Let's say we took those time cards, we sent them to be processed by payroll service, and they send us this payroll report, right? Let's go ahead and book this payroll report, and therefore, without going through the payroll module in QuickBooks, and you'll see that we'll pretty much achieve the same thing. How can we do it, right? How can we do it? Well, there is multiple ways to do it, right? We don't need to go into our payroll account and all that. We can actually, I'll show you one easy way to do it, and that's many of you have seen it before. General journal entries, and that kind of shows you the debits and credits right here, right? And then we'll show you other ways. So okay, so let's get to it. That's our 4/16/2021 payroll, right? That's going to be our payroll number. Oh, how about we'll do this? That's our payroll number. So let's document, and you've just seen how it's done, but let's document it all right here. What has happened? What is happening, right? So, first of all, we got to make sure that the checks, the individual checks, and you can see that now we do have 6 employees. Isn't that awesome? That individual checks right here are reflected because we need that for reconciliation. So I suggest first we do the checks. Right, what do checks do? They reduce our payroll account. How do we reduce payroll account? Payroll account is an asset, and assets are reduced when credited. So let's key in those checks, right? And what we do is we do our net pay, right? So all we know is that this amount will reduce our payroll account, right? So that's one right here. Then we this one. It's 1022. Again, reduction to payroll account, right? By the net amount. Here's a again, these are net checks, right? And one more. And we need those. Okay, here, net pay, because this person didn't work the full 2 weeks. So they're just getting half. And going forward, they'll catch up. All right, so these are the checks that will clear our bank account. All right, let's book that offsetting right away. Why not, right? We could do that. All right. What is it? That's our net pay. You see, it's right here. It's right here. So that's going to go into our payroll wages expense, right? And here we can use our payroll. What else is happening? Well, it's right here on our payroll report. We also have employee taxes that we got to pay, right? So here they are. What does it do? Well, it's actually, as we know, employee taxes is part of the wages. We're just holding on to them. So here it is, employee taxes, 961974. All right, it's not employer. Employer, the ones below right here, we can enter them too. Oops. That's the payroll tax expense, right? And again, the total is right here, 2,685.62. Okay. So this is offset by this, right? We know that much. And then payroll wages, right? Those two combined, right? That's debit to payroll wages. And expenses go up when debited. Makes sense. Payroll taxes, expense goes up when debited. These are the checks that will clear, right? So it makes sense they're reducing our bank account, thus their credits to 10,200. Right. What else do we have to enter to reflect? And we're going to do the whole payroll. I'm just going to show you in one journal to entry transaction. And then on the next one, I'll show you the little way to break it up. But I wanted to show this one. What else is happening here? We're not going to book liabilities. There is no sense because we're going to pay them. Right. So this portion and this portion, they're going to come out of our bank account. Right. Because that's basically these payments, right? 9,722.80 and 2,582.56. Let's break them up. just for kicks and giggles, so that we can reconcile better. Well, it's not just for 258256. What else? And again, you see their credits to account 10,200, thus reducing it. Oh yeah, it did math for us. All right, so here it is. These are the amounts of money that will be credited to our bank account, thus reducing it because it's an asset when we pay those liabilities, right? We're not booking liabilities, so we're kind of booking it right away. So you can see that, you know, let's see. We've got payroll tax expense, we got this. So I think that concludes it, right? So, oh, we got to transfer money. So here it is, 31,231. Well, we found slightly differently, right? Anyway, we got to move that money to our account, right? So that we have enough money to fund it. We're moving it to our payroll account. And we're moving it from our general account. That's it. That's it. All of this whole second payroll, right, is right here. I want to show you something. I'm going to delete this. And you see this amount right here, 31,230 and 24 cents. That's your payroll requirement, and there it is. That's your total, because that's what's going to hit your bank account, your payroll bank account, right? It's credits to your payroll bank account. Credits reduce assets, and that's what it says. Total payroll cash requirements right here. They're calculated for you on the payroll report. But anyway, let's finish what I started. We're going to fund our payroll bank account. Okay. That's it. So you can see that the whole payroll was booked in one general journal entry. How cool is that? I'm going to compare the two, but that assumes everything was calculated prior. That's it. I'm not explaining debits and credits here for one simple reason. They're all right here. So you can see that our bank account is reduced right here. That's the impact of the reductions to our bank account. So there's an increase to a bank account. That's the payroll. And then there's an increase to expenses. That's it. Simple as that. And that completes the second payroll of April. So we're going to save and close. Yeah, payroll liabilities. Do you still yes? It's QuickBooks. They're all done by programmers, right? Anyway, one more payroll. One more payroll of April. And again, we're not going to use time cards this time. We're not going to do all that level of details like we've done in previous months. We're not going to book it in one general journal entry either, right? So what we'll do is we'll show you other ways to do it, all right? Alternative ways to do it. And the way we're going to do it is with checks, right? We're going to stick to checks, and we're going to show you one other way to do it. So let's say you do want to preserve the check numbers, and that's one way to do it. So what you do is you write checks, you keep the payroll account, and you're going to do this basically. Now again, QuickBooks is a great sales. We're going to enter net pay. 478077. The rest we will book as a journal entry, for example, or checks. We can, let's see. Yeah, we can do the whole payroll through checks interface, technically. So let's do that. Yeah, why not? I love experimenting, you know. All right. Our check number 1027. All right. Payroll date 4/30/2021. All right, we got our net pay done. What is it impacting? Payroll expense. So our payroll expense is, wages, there it is. And let's explain it this time. All right. All right, so in this case, we're reducing our bank account by 4,780.77 cents, and we're increasing our payroll wages expense by the same amount. All right, and by now you know that this amount right here, it's a debit to account 66,100, and this amount right here, it's a credit to account 10,200. Right? That's it. Let's keep going. Why I'm not entering all this, we'll enter it as one journal entry. So, save and new. First we enter checks for pay for employees. 28 right here. This one is for our raise. Don't display it, not now. We can do it. Again, what I want to show is if you know your debits and credits, there is no limits for you. You can use any accounting software. It just becomes a tool for you. And that's what you need to do as a good accountant, as a good bookkeeper. Do not rely on them making your life simple because unfortunately they don't know how to do it. All right. This doesn't change, so this amount right here is a debit to account 66,100, and this amount right here is a credit to account 10,200. Save and new. Let's keep going. She's almost check. Check number is correct. All right. So we enter net pay here. All right. Let's just update. All right, so again, this amount right here, debit to 66,100, and this amount right here is credit to 10,200. Same. This is check for Kim. 2675. Payroll wages, right? Because this is wages. There's also another portion of wages, and we'll address it. That's the employee payroll taxes, but they're also part of wages. We'll deal with it. So anyway, debit, credit. This amount is the same. Alright, so that's convenient. We don't need to change anything here. Again, this is the debit, this is the credit. Save and new. Got one more employee here, but now they're getting paid full. And they work for us. Payroll wages right here. Debit, it's credit. Good to go. Right, multiple ways to do the same thing. Alright, so here it is. Saving new. We're going to do the whole payroll cycle just with checks interface, right, like I promised. Alright, so we're done with our employee checks. What else? What else is there, right? Well, as you know from payroll report, there is also employee taxes, right? And there is employer taxes, right? And then there's transfer. So let's do that. So first of all, let's do the transfer. So we got to change it a little bit here. So it's going to, okay, just. Even though it's a check interface, we don't have to use it as check, clearly. All right, so we're going to move $33,376 from our general to whom are we paying? Well, we're paying ourselves, right? So here we are. Oh, say the office. right? So we're gonna transfer to ourselves. Again, this check will not be printed. So what do we put here? Even though it says expense, it doesn't matter what it says. Again, if you followed our simulations before, once you know the debits and credits behind interfaces, it doesn't matter what programmer is forced to write here or there. I mean, it does have certain impact you have to understand, but you have to also understand what you can do with it. So let's show you right here. What's happening to 10,100? It's being reduced, therefore it's credited. What's happening to our payroll account? It's increasing, therefore it's debited. There it is, debits and credits are in balance. This amount right here, it's a debit to account 10,200, and 10,200 is an asset, thus it is increasing. And this amount is a credit to account 10,100. That's it. Simple as that. What else are we going to do now? Right? We're going to pay, right, those taxes. And that will conclude the payroll, because by that time we'll book everything that has to do with this payroll. All right, we have to go back to our payroll account because that's where we're gonna book it from. And previously they forced us to use the, you see, like, I'll go back for a second. You see, previously they forced us to use that check format. Now we're gonna use it anyway. ACH 4316. Oops. 4316, and this is state. Okay, state tax authority. And the total is 2007-4672. All right, what does it do? Well, it has 4 portions to it. All right, and you have to know which tax is employee tax, which tax is employer tax, and therefore that's how we're going to book it here. QuickBooks makes it a little easier for you because they keep track of it. You can establish it by going through payroll report. I happen to know. So state income tax is withheld from the employee, therefore it's wages. So we're just giving to the government what we withheld from the employee. State disability, that's also withheld from the employee. And then unemployment and training, that's employer taxes. That's it, right? Let's document our findings here. Total of $2,746.72 will be credited to account 10,200. Our payroll wages expense will go up. And our payroll tax expense will go up. All right, so each one of this is a debit to account 66. No, this is debit to account 66,200. This is debit to account 66,200. This is debit to account 66,100, and this is debit to account 66,100. Each one of those is an expense account, and therefore they go up when debited, and that makes sense. What else is happening? This amount right here is a credit to account 10,200 because it's an accident and it's going to be reduced by this amount. All right, save and new. And now we have to pay our federal taxes and we're set. And here it's going to be a little bit tricky, but again, I happen to know what these are and I'm going to show you one way to kind of, look it up without, federal, we're going to enter the total, because we know that. We might as well enter it here. Now we got to show what's going where, because federal income, that's pretty straightforward. That's the employee portion, and the rest has to be split. All right, so, well, I mean, I could do it right here. I'll show you a couple of tricks. So here's what it is. All right, so Social Security and Medicare are both paid equal halves by employee and the employer. So that's how it goes. All right, so all of these, half of Social Security, half of Medicare, and the full federal income tax, that's going to be a portion of our wages because they're withheld from wages. The rest will go into payroll tax expense, 66 to 100 right here. And that includes FUTA, federal unemployment, and half of Social Security taxes, and half of Medicare. That is, debits and credits are in balance. Let's just reflect it now. Right, so all right. Oops. There it is. Ta-da! Debits and credits equal each other, right? And that's what's happening here, right? We're booking the payment of federal taxes, and at the same time, we're booking those expenses. Previously, we booked the expense and the liability and then paid down liability. Here, we're doing it straight up, post factum, right? So each one of these items is becoming expense, and then this is a reduction to our payroll bank account, which is an asset, thus it is credited to be reduced. Expenses have to be debited to be increased because expenses are going up. Where else can you look up this breakdown? I'll show you one little trick. So if you go to the payroll report, you see the breakdown right here, 188,632, right? You could take that. You can just take the sum of employee taxes, and I'll show it right here. So let's say we take this out, this out. Let's leave it like this for now. So what is this amount? That's the employee taxes right here. 10,162 and 12. Right? And then each one of this is right here. Right? That's your, right? Because it's just federal. The state is right here. So for the federal, those are your three line items. Right? Makes sense. So anyway, save and close. That's it. We're done processing payroll for April. We showed you three different ways to do it, right? The traditional using payroll module, using single journal entry, and then using just checks interfaces. All are legitimate ways of doing it as long as you know your debits and credits. Again, you sacrifice a certain level of the details, but that's okay because we want to show you different ways to do it. And that's our objective with this exercise. Typically, you would use time card. Unless you process payroll outside, then you would just process it, and that's why we're doing it. Next, we have credit card transactions that we got to post, invoices from vendors, and then reconciliation for April. And going forward, we'll show you in future months all other ways, not as detailed, bypassing accounts receivable, accounts payable, and how to book those transactions. So I think it will be interesting to see those different ways. Please stay tuned.